there. So I'll just put myself there. I hope that's not annoying because I already have my picture here, but I hope that's okay. So let's just begin with what we're going to discuss today. So, a little background about myself. I am a VA, a virtual assistant, and I have been freelancing since 2015. But before I became a VA, I was an accountant for multiple clients. I mean, multiple multinational, nonprofit, and small business owners for about 16 years. In 2015, when I decided to work on online and work from home. So, of course, initially, my very first clients would be that of small business owners in need of bookkeepers, okay, virtual assistant bookkeepers. So I have had clients coming from the US, Canada, and UK. And as a bookkeeper, a virtual assistant bookkeeper, I help them with managing their finances, their financial records, and their financial reports, as well as the basic of tax filing for their employees and their business there. So one of my avid subscriber asked me if it's possible in one of my YouTube channel, live streaming that I'll be able to present something about bookkeeping. So I thought, yeah, maybe we could just dive into the basics or the fundamental concepts that you need to learn if you are a VA, bookkeeper, the fundamentals of bookkeeping or the accounting equation per se. So long as you understand the concepts of this accounting equation, then I guess the rest of the things that you needed to do as a bookkeeper will be easy. Okay? So let's start. So welcome again to our YouTube channel live. This will be, I think this will be a weekly thing for me. Okay, Monday, Wednesday, Friday. However, last Friday I wasn't able to do this live, so I rescheduled it on Sunday. Now that it's a Sunday, and I don't want to make it like what do you call this? Most probably the Monday one, I'll move it to Tuesday, and the Wednesday one, I'll move it to Thursday. And then the Friday one, I'll move it to Saturday. Okay, so that will be the changes for this week, this coming week, YTC Live. But the the week after next week, we're going to go back to our original days, which is Monday, Wednesday, Friday. So there you go. I am Loy. You can call me, some people call me Mommy Loy, some people call me Mentor Loy, Miss Loy. But Loy is actually just fine. I am a virtual assistant and as well as a digital marketing specialist. And like I said, I've been in this industry for about maybe ten years already. So yeah, that's my corporate background is in accountancy. So if you want to know more about my expertise, what I do, please check out my website, which I have or I will be sharing through the comment section. And also, please check out my LinkedIn profile so that you know where to find me, how to contact me. Okay. So this will be our schedule for the week, okay, except for next week. Then our next week will be Tuesday, Thursdays, and Saturday. But on a regular basis, Monday, Wednesday, Friday. Mondays, I'll be talking more about apps and tools that you might use and discover helpful if you are working as a virtual assistant or a freelancer. Then Wednesdays, I'll be sharing some how-to videos and tutorials, and Fridays, strategies and concepts. So this one is actually part of the accounting concepts or bookkeeping concept. So that's why I am going to discuss this particular um, accounting equation, okay, the basic accounting equation that you need to learn to become a virtual assistant bookkeeper. Okay, so good day again to everyone. Today I would like to talk about the fundamental concepts of assets is equal to liabilities plus owner's capital minus the owner's drawings plus revenues and expenses minus the expenses. Okay, this particular equation is actually what do you call this? A longer equation already. Okay, this is a longer version of the basic accounting equation. Actually, the basic is only assets is equal to liabilities and owner's capital. Later on, down the road, down the this particular live streaming, I'll tell you a very specific, a very simple way of understanding this concept. Okay, this equation is forming the basis of the double entry accounting. Okay, so accounting is double entry system. Okay, and it's used to understand the financial position of a business. When we say financial position is, if your client asks you, okay, where am I right now with regards to my finances? Am I earning? Am I getting profit or not? Okay, so there. Now, I mentioned about double entry accounting, and double entry accounting is actually a method of recording financial transactions. Okay, financial transactions are basically the day-to-day um, records, financial records that you need to bookkeep. Okay, as a accountant or bookkeeper of a particular client that you might encounter online. Okay, so the name double entry comes from the fact that each financial transaction that you encounter as the bookkeeper of a certain client's company is recorded in at least two different accounts. Okay, so the equation a while ago is actually those are accounts. Okay, the major, the top, or the heading accounts, and then within it there are sub accounts. Okay, so you need to have those two different accounts, and you need to balance them. Okay, in your client's company's accounting system. So this double entry accounting, every transaction has two entries. We have the left side and the right side, or what we call as the debit and the credit. Okay. Now, where do we got that idea of the debit and credit? So if you are also an accountant and a bookkeeper, you always way back before they always use this journal, like a ledger. They call it a ledger, and you'll see that each of those rows there, each of the pages there, you will see two columns. Okay, one for the debits and one for the credits. And later on, you'll find out which one needs to be debited, which ones needs to be credited. Now, the purpose of this double entry accounting is double entry accounting is that it needs to ensure that the accounting equation that I showed before, the assets is equal to liabilities plus owners equity, remains balanced. Okay, that's the very purpose of it. So since the assets is normally a debit, okay, a debit account, and then the liabilities and owner's equity is by default a credit account. They usually gets written left on the right side, while the assets are usually written as a debit. Okay, it's a debit entry. Okay, I'm talking about the amounts. Okay, but when you just write the account name, of course, it needs to be on a certain column in your ledger. And then the two columns there, the debits, credits, those will be filled out with amounts. Now, this double entry accounting system provides a system of checks and balances. Okay, that's why you need to balance it. Whatever is the amount you find in the debits needs to be equating to the amounts found on the credit side when you do your bookkeeping. Okay, so it having that check and balance makes it less likely for you to commit errors or fraud to go unnoticed. Okay, so auditors actually that their job is financial auditors. Like in the Philippines, the well-known financial auditing firm is SGV. So their role is to make sure that the financial records is accurate, timely, and there is no hidden fraud, because it's money, and some people get tempted when it comes to money. So if an accountant is really good, they can commit a fraud out of those financial records. So um, as an auditor, no, the role of the auditor is to make sure that those inaccuracies and fraud are actually will not, remain unnoticed. It's not that they're basically intentionally looking for a fraud, but it's not. It's sometimes when they do their financial audit, financial auditors will just find out that, okay, there's something wrong with these records, something is not right, so they're gonna be investigating that further. So, in even case of virtual assistant bookkeepers, most of the clients that I have met before, they have a separate accountant. Okay, the accountant is normally coming from the country already. So, if I have a U.S. client, their accountant is also from the U.S. and mainly because they are certified to release the financial records, sign it, and send it to their what we call as in here in the Philippines, send it to our SEC. So in their end, they also have an SEC agency. So the accountant from their country is the one who lodges those information to the SEC of their country, and also they also have their own BIRs. So it's their accountant that also lodges the uh, tax records to their BIR. Okay. Now, what's the role of the bookkeeper? The bookkeeper will be assisting their accountant, okay, the accountant of your clients to put those financial records together, maintain it and manage it well, making sure that the records are accurate and everything has been accounted for. Okay. So, additionally, this double entry bookkeeping, it provides a comprehensive and detailed records of the company's financial transactions, which can be, of course, useful in making your client a informed business decision. Now, it's time to break down the equation. Okay, the main equation basically is just involves assets, liabilities, and owner's capital. Okay. So these three, you'll normally use them or see them recorded and being reported onto your balance sheet. Okay. The next part of the equation are usually shown in the profit and loss, or sometimes they call it as income statement. But most of my clients, they term it as profit and loss. So for these three, you usually see these accounts in the balance sheet. Okay, that's two of the most important month-end reports that you need to put together and then reviewed by the accountant of your client before the accountant when you present it to your client. Okay. Now, what is assets? Assets are resources owned by your client, okay, by the business, okay, his business that has monetary value. Okay. So it can be converted to cash. Okay, those are assets. So long as it can be converted to cash and owned by the business of your client, then we term those as assets. So there are sub accounts or other accounts under it. So example of the assets that you might encounter are cash, petty cash, investments, inventories, and properties. Properties can be equipment, it can be the land that your client has. So those are assets. Whereas liabilities, this is a term that bookkeepers and accountants are very familiar. Liabilities are obligations. You have to pay this. Okay, this is owed by the business owner. Okay, your client. Okay. In Tagalog, we call it as utang, or in English, more of a debt. Okay, so it is owed by the business or the client to its creditors. Okay, the one who said, okay, sige, you could pay that on a later or on a staggered basis or on a later date. Okay, so that those are liabilities. And examples of these liabilities are loans, accounts payables, and taxes owed. Whereas the owner's capital, okay, by the term owner and then capital, meaning it's the business owner's money, okay, that he invested into his business. Okay? And this would normally include the initial investment of the client, of your client. Now, in the Philippines, when you put together a corporation, for example, you need to go to SEC and you need to put together a uh, articles of incorporation, the bylaws, and in all of those documentations, you need to put there how much is your capital as the business owner. Okay? So in the most corporations here in the Philippines, they really have to have really big amount of money, especially if you are registering in SEC. For small business owners, they do not have to. Usually, small business owners here in the Philippines just go to DTI, the Department of Trade and Industry, and then register their business name there. Okay. So, in other countries as well, they also have this owner's capital, the initial investment of your client to his business. Okay. So, these are as well are additional investment, okay, that he would made over time to his business. Okay. So as a business owner myself, whenever I earn extra from my business, instead of spending it to personal items, I would rather put it back to my business and make it grow a little bit more. Okay. So that's what we call as owner's capital. Tagalog, they're more known as puhunan. Okay. Now, this is the next side of the equation. And these things here that you are seeing now, the owner's drawings, revenues, and expenses, are normally seen in what we call report, income statement, or profit and loss report. Okay? Now, the owner's drawing, as the term suggests, drawing means withdrawal. Okay? So, as a business owner, I also need to be salaried. Okay? I need to also enjoy the fruits of my labor, the fruits of my hard work to my business. So, I need to take money from my business as well. So those money that the owner takes as a form of a drawing is what we call as owner's drawing, and they represent money taken out of the business by the owner for personal use. Okay, so revenues, on the other hand, are the income that the business generated, okay, through operating. Okay, so when the business gets keeps on selling, they get money out of it. The sales or the revenues are what what we call as revenue. So terms like sales, like interest income or rental income, those gets added to what we call as revenues. Now expenses, okay, probably you're familiar with it because every household, okay, even your personal household, you have family expenses, household expenses. Now for the businesses, they also have expenses. Okay, these are money or costs that we incur or and spend, of course, to run their business, okay, in order to generate that revenue. So example of these expenses would include terms like cost of goods sold, rent, salaries, and utilities. Now, cost of goods sold, this is more, you're gonna match this with your inventory, okay? When you buy your raw materials, for example, for your business, the cost of buying those raw materials is what we put in our cost of goods sold. Okay. While the rent, for example, when you have an office, for example, as a business owner, I have an office. Now, the rent that I pay for my office is also part of my expenses. And if, say, I'm a business owner and I have interns, I have contractors, I have employees, okay? So their salaries forms also part of the company's expenses. And of course, as I operate, I would need light, I would need water, I would need aircon. So those utilities, okay, also forms part of the company's expenses. So the whole, um, if we put it together, what we need to understand is that this particular equation, assets is equal to liabilities, our utang or debt, plus the owner's investment or the capital. And then let's take away the drawings or withdrawals of the owner, add back the revenues, and of course deduct the expenses. So when we calculate that part, the right part, the liabilities, the owner's capital, etc., all of those equates to your asset. Okay, whatever is left by um, adding liabilities and capital and subtracting drawings, adding revenue and subtracting expenses, whatever is the amount left there, it should match how much will be your asset. Okay, so that will be our equation. Now, this particular equation provides a snapshot, okay, a picture of your client's business financial position, and it helps to ensure that the double entry accounting system is in balance. So when later on when we put numbers in there and we find that the numbers are equating, then we have attained the goal of the double entry bookkeeping system. So to make it this more simpler, okay, for a layman's or someone who doesn't have enough background with accounting or bookkeeping, let's uh, give a scenario. Okay, for most Filipinos, probably during the morning, gonna be hearing someone telling or shouting "taho, taho." Okay, those are one of the most favorite Filipino, I guess, snack or Filipino breakfast. Okay, you usually hear them in the morning, so I would say that that's a breakfast, and it's actually soya or a tofu, and melted and then put in that big cans. It's hot, and they put what they call this, a caramelized sugar on top with those little sago or pearls. Okay, so when they mix together, um, it's a very refreshing and sweet dessert or sweet breakfast or sweet snack that you will enjoy. Okay, I don't know if other countries already have taho, but I guess so because Filipinos are over the places, all over the different countries. So probably there are Filipinos selling taho. So here's Mang Danny. He is a taho vendor, and we're gonna break down his assets. Okay. Now, let's say these two cans here, the lagayan of the taho, that's an asset because that is something that he owns. Okay, and if ever he needed cash, he could easily sell it and then it can be converted to cash. So basically, that is an asset. Okay, anything that you can easily convert to cash is an asset. So that lagayan of taho, let's say that's $100. Okay, and then the cups, those little cups, he also needs to buy that for let's say $20, and then he also would need the soya, the sago, the caramelized sugar. Those are the raw materials that he needs to buy in order to put together a taho. So that sago soya and the caramelized sugar, let's say it costs about $50. Okay. So we have the lagayan of the taho, those two cans, that's $100. The cups where he would put the taho, that's $20. And the raw materials, the sago, the soya, and the caramelized sugar is $50. So all in all, his asset is $170. Okay. Now, let's say that lagayan of taho is actually not yet paid, not yet fully paid. Okay, he just starting out, and from a friend, he said, "Can I borrow some money from you, and I will just pay it later once I have an income from my taho selling." So that money, okay, the 100, let's say that he loaned $100 from his friend, and he bought that two cats. So that his liability is the $100. And out of his pocket, he has $70 cash. Okay, so that $70 cash is his owner's capital, which he would invest into his taho business. Okay, so the things that the $70, he bought the raw materials for $50, and that cups of $20. Okay, so that's the owner's capital. And the one that he used to buy the two cans is what we call liability, because he just borrowed it first initially. Okay. So that's, I think, the simplest way of understanding what is asset, what are liabilities, and what is an owner's capital. Now, let's go to this. Okay. Owner's drawings, revenues, and expenses. Now, let's say at the end of the day, he was able to sell some those two cans of taho, and it totaled an earning or revenue of $200. So basically, he has $200 as money, as the coins and the paper money. So that's total $200. Now, remember that he also bought earlier the cups and the what do you call this? The ingredients, which is the $70. Okay, and then out of that, he said, "Okay, since I work hard, I'm going to take away $130 so that I could spend that money to my family. Okay, the food of his family, the utilities of his house, etc. So for personal purposes, he take away $130. Okay. Now, in our equation earlier, we said that the liabilities, the $100, we have to add it to the investment, the owner's capital. So 100 plus 70 is 170. And now he also earned $200. So we have to add his earnings, the $200, and subtract or minus his expenses, the $70. And then we also going to take away the owner's drawing, the one that's his kind of sort of salary, $130. So you get your calculator, put those numbers into the liabilities plus capital owners plus less drawings plus revenue and expenses. How much will you get? It's $170. Now, the assets, a while ago, we have discussed that it's also $170. Since this asset, $170, and the total of this liability, $70, then 170 and 170, we have a balance account. So that is already a good double entry bookkeeping. Okay? So that's about it. That's how simple you have to understand what assets, liabilities, owner's capital, owner's showing, revenues, and expenses is for. By thinking of this magtataho, you'll be able to understand which ones are your assets for your client's business, which one are liabilities, which one is the owner's capital, which one is a drawing, which one is a revenue, and which one is expenses. Okay. Now, it's time for our Q&A portion. I'll just go back to. So if ever, I don't think we have any questions right now. So if ever you watch this video and you have some questions about what I have just discussed, please comment your question on the comment section of this video. Okay? And don't forget also to sign this attendance. Okay, this attendance is actually just gonna be asking for your name and email address and your goals as a virtual assistant and freelancer, and what type of information you might want, what type of mentoring, and also if you are a business owner, what type of support you might need for your business. So just type in into your browser https colon double backslash bit dot ly then slash backslash attendance uh, YTC live. Okay, attendance YTC live. And then it's going to be a Google form. Answer that Google form, and after answering that, I'll be able to determine how else I can support you as a virtual assistant myself. Okay. I know that there are also virtual assistants out there who would like to know more about becoming a virtual assistant. So if you're a mommy, a daddy, or a student who would like to explore becoming a virtual assistant, then please check out that Google form, that particular link, and then answer it. And on my next live, I'll be able to give more content that actually you need. Okay. Again, this particular content today about bookkeeping was requested by someone I met. She actually is an intern in my previous company, and she requested me to mentor her and her colleagues about bookkeeping. So I thought maybe this particular concept, okay, the initial concept of accounting per se, the equation, would be the best way for them to understand in layman's term and in something that they can relate to. Okay. So in cases that they have their clients and they would need to ask questions about bookkeeping, then feel free to message me here in my YouTube channel, comment down here below, or message me on my Facebook page, and I'll be able to create content and give that content here in our YTC Live. Okay, thank you very much, everyone, for joining and attending this short and really compact YouTube live today. Thank you and enjoy your evening. Bye.